Hopefully you watched our video on HO6 policies and loss assessment coverage. This is an additional video about loss assessment and how those deductibles are handled, and particularly during today's age when deductibles for association are changing and there's extra components to it. So, just a quick recap. Loss assessment coverage as a part of an HO6 policy benefits the homeowner from when there is a claim on the master policy of the association. So if there is a claim, the association is going to assess the homeowner the deductible, whether that's a shared deductible among multiple units or whether that's one homeowner. There's a couple of different scenarios that I want to show you that you can see on the slides above. One common issue is maybe it's a water loss. We've got a unit that had water loss to the condo building. The total damage was $25,000 of damage. Now the association has a deductible of $10,000. So the association is only going to get a check for $15,000. We have to make up the $10,000, and how do we do that? We send an assessment letter and we assess the homeowner benefiting $10,000. The homeowner is going to probably be a little freaked out of, what do I do? I'm being charged $10,000. Well, they turn that into their HO6 agent. If they have loss assessment coverage, then the HO6 policy cuts the association the check for the $10,000. The association is made whole. So that's one scenario of the importance of loss assessment. Now, another scenario that we want to go through is percentages, because this is becoming really the standard and mandated policy for townhomes in particular when it comes to wind hail claims. You know, usually on a master policy there's a primary perils deductible. We just talked about one being $10,000, but on every policy now there's a separate one for a wind hail loss, so a hailstorm being the most common. So it's not the standard $10,000, it's a percentage. So what that is, your policy is built on values. What does it cost to rebuild this association? Maybe that is $1 million. Maybe you have 10 buildings that are all worth $1 million each. So you've got $10 million in coverage. So if there's a hailstorm that comes through and destroys those roofs, it's not a $10,000 deductible. They're going to say, well, it's 2% or it's 1% of the building value. So you'll see in this quad home scenario right now, they have a 5% wind hail deductible. There's $1 million of coverage per building. So that means every building has a $50,000 deductible. So if it costs $60,000 to re-roof, the insurance company is only going to give you a check for $10,000. The association has to make up the $50,000. So how do you do that? Again, like we talked about earlier, you assess the HO6, you assess the homeowners. So in this case, it's a quad home community. So you would take that $50,000, you would divide it by 4, and each homeowner in that quad home would be assessed $12,500 that they would turn into their HO6 policy. Their HO6 agents cut us a check and we're made whole. So it's important to just understand how that works, because as these wind hail deductibles continue to increase, it's becoming more and more imperative that homeowners understand what that deductible is so that they can adjust their HO6 policies accordingly. So hopefully you found this helpful. Lots of other great videos on insurance and other topics at sharpermanagement.com. Check it out. Thanks.